right, pretty excited to have John Ostenson on the show today. John, man, you got a background which is super interesting. We have people from all walks of life, different abilities, and they've started different businesses. But you in the Fortune 500 franchising, being able to create franchises as a Fortune 500 executive, I really want to dive into this and learn a little bit about it. So welcome to the show. Thanks for being here.
Yeah, I appreciate you having me, Joe. Love the show and excited to be here with you. And no, I've said yes to a lot of things in my career and learned lessons along the way as well.
Yeah, absolutely. We're going to definitely dive into some of those lessons today, maybe some of those obstacles and challenges that you've overcome and on your rise to success. But give us a little bit of background. Like, where did it all start? Where did it all begin?
Yeah, to kind of skip forward, I mean, great childhood, but then out of the University of Georgia, went with Accenture, large global consulting firm. Had the opportunity to work in India for about 6 months and try my hand at a few different things. And like so many, I then went back to business school and got the graduate degree. And from there, never thought I'd take this path, but I ended up in the children's apparel space. So worked for Carter's, Oshkosh B'gosh, multi-billion-dollar children's apparel manufacturer. And really, it was the role that attracted me to it. Work for the president and serve as his right hand. And the company was always very good to me, and I stayed for 10 years, and it was really hard to leave. You get the golden handcuffs and the stock vesting and everything else that makes it so tough for so many people.
Sure.
But I had that desire to do something a little more entrepreneurial, and wasn't sure what that was, and I really stumbled into franchising. Had been looking at a few different private companies out there, and had the opportunity to step in as president of ShelfGenie franchise system, which is custom pull-out shelving for kitchens and pantries. And so had the opportunity to come in and work with small business owners, our franchise owners across North America, and supported them with our marketing teams and with our call center and technology teams and product development. And really got to see firsthand how franchising, outside of food, which I'd always associate a fast food with franchising, got to see that there are more industries and sectors that can provide a great living and that independence that a lot of people are looking for. So I also got to see what worked well and what didn't work as well. Who were the top franchise owners and what were they doing differently. So that really opened up my eyes, and ended up partnering with the founder of ShelfGenie. We spun off and created a digital marketing company and agency and media buying. And then we had a call center. So it's kind of a unique combination. We made the phones ring and then we answered them. And we supported a number of different franchisees across different brands out there in the market. And we grew that into a multi-million-dollar business. We're doing a couple million a year, had about 40 employees. And ultimately, the business didn't work out. It was my 40th birthday weekend a couple of years ago, and we had a couple of franchise systems that wanted to come on board as new clients of ours, and we weren't able to get to pricing that we could all agree to. And I really saw the writing on the wall that what I thought was a great model of marketing and the call center, though it looked good on paper and people wanted it, they weren't willing to pay for it. So I made a difficult decision to wind the business down. It wasn't some big sexy exit or anything. It was really calling a spade and realizing we'd never get to the profitability for the effort that we were putting in. So found good homes for all of our people and for our teams and for our clients, and I'm really proud of how we wound it down. But pivoted from that over to where I saw just massive opportunity, and it really played to my strengths in what I'm doing now. And that's working on the brokerage and consulting side. So I get to work with several hundred franchise brands that we vetted, feel really strongly about across a whole number of industries, largely in what I call non-food franchising. And get to represent them and finding great candidates to step in as new business owners. Both those that are looking to go full-time, leaving the corporate world, as well as those that are looking for maybe portfolio investments that can complement or diversify what they currently hold. So I have a lot of fun getting out there, educating, helping people step into it. And of course, I love franchising. I own some franchises myself with some business partners. So I've had the opportunity to be on the franchisor side, now the franchisee side, and where I spend most of my time is brokering deals.
I love it. And I want to touch on, I want to get into the non-food franchise side in a second, but we got to talk about this pivot you made, because I can relate to you wholeheartedly. About 4 or 5 years ago, 4 years ago now at this point, we made this big pivot where we switched from single family homes and exited and went into self-storage. And it was a mind-bending transition. It was a difficult transition. And, I, like you, was about 10 years into it and had built about 45, 50 employees and were making money. And Again, same thing, saw the writing on the wall. Just if you could kind of walk me back through those feelings and like maybe some of the anxieties or pressures, because I think there's a lot of people who face these challenges who realize like, hey, this isn't working, but they stay far too long in something that isn't working instead of making the pivot and going into something that is. So what do you think like is that precipice? What do you think is the thing that should give you that pause?
With my corporate background, I was used to being able to make some decisions, but not all decisions. There was still hierarchy. I reported to the president of Carter's. And I think that ever since I left the corporate world, I've been much faster in my decision making, just how I'm wired. I love the idea of being able to pivot and try new things and not have to answer to anyone. That's just how I'm wired. And so we'd had probably 6 to 9 months leading up to the point where I made the call, in which I was journaling, which I usually don't do a lot of journaling, but just writing down my thoughts and kind of strategies and praying about it and just trying to seek wisdom from outside. And it came to the point where I brought on a lot of young leaders around me that I'd promised this big equity potential to, and a lot of them were taking pay cuts to come work for us and lead the teams, and had a great culture, had a lot of good things going. But I think other people started to pick up on, hey, the profitability is not there, and we're putting in a lot of work. Is it ever going to get there? And so we had 3 large franchise systems wanting to come on board, and it was really that decision point where it's, hey, do we onboard them knowing we're not going to make a lot of money on them? And for me, it was really looking in the mirror and saying, I've got to make a tough call, and I can't kick the can down the road. And so made the call. 30 days later, we'd wound it down. So once we made the call, we made it fast, and
that's quick.
And took it to where it needed to be. This was all prior to COVID. I honestly can't imagine going through COVID with that. So feel very fortunate, and you learn a lot about yourself through those times as well. For me, I've led companies of larger numbers of people. That's not what I'm passionate about. Some people are so good at that. I would much rather work with clients and get out there and educate and strategize. I mean, that's just how I'm personally wired. And you learn a lot about yourself through those situations.
Love that. All right, let's shift back. Let's go into the current business now. We're talking non-food franchises. What's it look like? I mean, how do who's your prospect? Who do you want to talk to? And, how do you engage with them? And what's the benefit? How do they get involved?
Yeah. So first off, it's entirely free for my clients, which I'll get into what we're doing. But I get paid by the franchisors. It's a sales and marketing expense. None of that gets passed on to my clients. So I personally love the model because I get to sit on the same side of the table as my clients and helping them walk through the process of evaluating different opportunities. And I work with enough clients, I'm able to see what's resonating with so-and-so with a very similar background and how that can complement. I know a lot of your listeners are real estate investors. I'm a real estate investor myself. More than half of my clients are real estate investors, and they're looking for ways to either complement their real estate practice in some cases or help diversify. We've got record levels of cash sitting on the sidelines. Interest rates extremely low, only so many good real estate deals to be had in a given market. So people are looking for ways to diversify their income and create revenue streams. And we're seeing 2 different things. One, it's those from an investment standpoint, they're looking for more what we call semi-passive revenue streams, where you put a manager over the business. But then also many that are looking to leave the corporate world. I did a deal yesterday with a former Wall Street attorney just outside of Boston, and he bought a gutter business. Never thought he'd be in that business, but if I told you the numbers around it, you would understand why he made that choice. Sure. And I did a deal 3 days ago with a couple out in Fayetteville, Arkansas. They work for the University of Arkansas. They bought into a fitness business that caters to the older population, which is a very underserved demographic in that capacity. So, client buying a property management business later this week, and he's a real estate broker, so it complements his business. And so I could go on and on about what people are attracted to, but we're doing more placements and see more interest than we've ever seen, and that's, I think, due to a couple of things. It's the cash on the sidelines, but it's also, coming out of COVID, people wanting that sense of control and that flexibility, and maybe in a lot of cases being able to work remote. I think a lot of people are questioning the path they're on, and many don't have what I call non-food franchising on their radar. So I enjoy getting out there, and over 80% of my clients end up buying into something they never would have thought of otherwise. But once we peel back the onion and understand what they want that to look like, and I've got some clients that go out and start their own business, a traditional startup. Obviously, the rates of franchising success are significantly higher, but it's not for everyone. Some people are
Sure.
too entrepreneurial, but then others recognize the fact that, hey, if there's a playbook and it's a proven model, de-risk it to some degree. Got a franchisor who's like a coach on the sidelines. I've got other franchisees in the system that I can learn from. And then there's the potential for a really attractive exit as well. You're building an asset, and oftentimes I can cite different studies. Oftentimes we see, franchise businesses when they go up for the resale market, trading at a higher multiple than their non-franchise counterparts.
Wow, that's interesting.
Private equity sees the value in it. Private equity is all over franchising right now, but a lot of individual investors too.
So, the first thing I read on your bio and I thought was very interesting is I've never heard the term non-food franchise. So, I mean, now that you've coined that term, give us why. Is it the de-risk? I mean, why not food?
Hey, there are a lot of ways to make money, and some people love the food space. I'd say over 95% of my clients don't want anything to do with food. That's not my background. And yet, when I say the F word, franchise, you think fast food. And so
Sure.
I did kind of see an opportunity with the segment to brand it a little bit differently. And so, coming out of COVID, people want essential services oftentimes. They want things that are Amazon resistant, COVID resistant. They're gravitating towards businesses that I would call non-sexy. It's things like roll-off dumpsters. It's property services are through the roof. We're doing tons of deals with driveway companies. I'm an investor in one of those. Insulation. But then we're still doing a lot of business, with things that cater to the older population. Anything health and wellness wise. I mean, automotive is very strong right now. We just did a 10-unit oil change with using prefabricated buildings, so you get in at a lower cost. There's just some creative models that are coming down the chute. A lot of businesses, they're saying, hey, maybe we should consider franchising our business, even though we're non-traditional franchises, you would think about it. But maybe that's a good means to scale.
Yeah. I thought I coined the term "it's not sexy" because I flipped into self-storage a couple of years ago, and after selling these like flip houses, everybody loves flip. HGTV, propagated this for the last 10 years. We started doing self-storage, and I kept telling my investors, "It's not sexy. We're building concrete and steel boxes." But so I love that you use that terminology.
Oh, and non-sexy is the new sexy.
It's the new sexy.
Clients ask me about self-storage all the time, and car washes, and absolutely.
That's it. The numbers work. That's all that matters. It doesn't have to be sexy. The numbers work. I'm like, the numbers are really, really good, but it's not sexy. We build concrete and steel boxes. So tell us a little bit about, what does it take to invest in one of these? I think most people think about franchise. They think I need $1 million to buy something. I mean, what does it look like on the cash perspective? I know everything's different, but give me some rough example of what one might look like.
Yeah, our average deal size, I'd say, is between 150 and 250. Okay. And there are ones, the driveway business I invested in, we went all in for 90,000. So, those that don't require brick and mortar retail presence, which we're still doing a lot of those deals too, but those would cost more, take a little bit longer to start up, maybe not be quite as flexible, but there are pros to those as well. But I'd say the majority of our deals are between 150 and 250. Some people are tapping into their retirements through what we call a ROBS plan, where you can set up as a C Corp and you're able to evade some of the tax, downsides. But also SBA loans continue to be very common, especially SBA Express loans that are 150 and below. So we work with some great partners that help our clients get into lending opportunities. So that's kind of what we see there. I'll just use that gutter company as an example. And this is one, the profitability is a little bit higher than some others. So know that going in. My client all in for one location there, I think he's all in 155-ish. That includes your franchise fee, startup costs, some working capital, some initial marketing. And that business, the returns are insane. They're averaging, this is across all their locations. Their owners are doing 1.2 million in revenue per location, with 383 dropping to the bottom line. Don't ask me how I remember that number, but I call it 31% drop in the bottom line. Their corporate locations doing 3.5 million. There's a lot of meat on the bone in those areas that aren't necessarily reinventing the wheel, but they are bringing a white collar approach to a fragmented blue collar industry. And some of these businesses you could go start on your own, but you'd be starting on first base. With franchising, it allows you to start on third base, to be a little cliche on you.
No, I like that too. And these mostly, are they new, started from scratch? Are you buying existing operating franchises? Do you have to get involved as an owner operator, or are they kind of hands free? What does the typical, deal look like? on that
Yeah,
side?
so some are existing operating businesses, what we'd call a resale. The vast majority are, new to the market. You may have an owner across the other side of the market, but you're new to the market. In some cases, they buy the entire market. But no, they're both models. One is owner operator where you're going full time. One is what we call semi-absentee. It's not totally passive. It's not fully absentee. Nothing is really
Yeah.
out there for the most part, but you're putting a manager in place. And so if you have someone that you trust, and I cite case studies, I've got, for example, a client of mine in Columbia, South Carolina, Nathan, he's the largest franchisee of 2 Men and a Truck, which is a franchise moving service. Operates in 9 or 10 markets. The guy's only 40 years old. He's done very well, built a $30 million business, and he's got a great organization. Well, he and I did 2 deals together last year where he bought into a home services business with one, and in another one, he bought into a trash smashing business. Talk about non-sexy, but people love that stuff. And in both cases, he put a young guy over each of those businesses for him. He actually chose to give them some equity, so they acted like an owner. You didn't just tell them to act like an owner. And in both cases, they've come back and already bought additional locations, in the first 12 months. So a really good validation on there. But no, I have a lot of clients that are repeat buyers that are building out that portfolio one business at a time. In some cases, they complement. In some cases, they diversify. And a lot of my clients are existing business owners too.
Yeah. So you must do a lot of strategy call, I assume, if just figuring out how to lay out what building, what business to add on or layer into, or, I guess start from scratch, right? I mean, I assume you have a lot of calls with investors that are looking to figure this stuff out.
Yeah, and you start to see patterns and common threads between them, which helps expedite the process. But then everyone is coming at it from a different angle, not only their financial position and what they currently own in their market, but also where their headspace is. And but I'd say one differentiating characteristic for a lot of my clients is they understand, while some people think starting a business is risky, many of them recognize that working for someone else who's able to make the calls on their career is more risky.
Yeah, absolutely. Yeah, I can see that 100%. And any limit to where? I mean, is it mostly, certain, are you limited to a certain area, or is it nationwide? I mean, do you have hotspots that are better for certain franchises?
Yeah, I work across the entire US and even some international. Certain franchises, play better in, let's say, Florida than they do in Boston, due to seasonality or just due to the market need. Obviously, like everything, I mean, we see a lot of growth in Texas and Florida and Georgia. Carolinas are huge for franchising. But I just did a deal out in Los Angeles a couple of weeks ago, did the one in Boston this week, did one in Indianapolis 2 weeks ago. So no, we're seeing all the markets, really in play. And like I said, we've placed more than twice as many clients as we did last year, which actually during COVID, we placed twice as many as we did the previous year. So we're seeing huge levels of interest. Some people kick the tires and end up not buying, but quite a few are really getting serious about it and pulling the trigger.
Love it. Love it. What questions did I forget to ask? I mean, if you're a franchisee or an investor who wants to become a franchisee, I mean, what kind of questions do they ask? I mean, what kind of things do they have to throw you off at a given time? I'm sure you're pretty seasoned in answering these questions, but anything come to you where you're like, wow, I never got that question asked?
Yeah, there are a lot of questions. I say, hey, ask the franchisor, not me. I'm flying at 30,000 feet, but I have seen enough and had enough conversations across the country to understand kind of once I clue in on a few things, that you share with me, I kind of know which path would be a good path for you and the types of opportunities that we ought to look at. No, you get asked all sorts of questions. Some want to understand, why am I paying the franchisor a percentage of my revenue? And, we talk about why, that's a trade-off. You're doing that for the support levels that you're getting from them. And if you're not getting that support level, that's an issue, but we try to go in eyes wide open. The great thing about franchising too is every franchise system has what's called a franchise disclosure document, or FDD. It makes their financial representations all on cost. They're regulated by the Federal Trade Commission, so they really have to cross their T's, dot their I's on what they present to candidates. But the FDD allows you to go in knowing, hey, here's the average of other franchise owners' businesses. I'm not just using a pro forma on the back of the napkin. Nothing's a guarantee, but at least I've got some really good data points. You're also able to talk to other franchise owners through what we call validation. Ask about their experience, how much support have you gotten, how fast did you ramp up? And so there's a lot of ability to really go in eyes wide open, make sure it's the right move for you. And it's a new skill set for a lot of people, analyzing businesses. How do you compare option A to option B, and what lens should we apply to that? What
Sure.
framework should we be looking through? So I love what I do. I love exposing people to these opportunities that they wouldn't have thought of otherwise, and kind of holding their hand through the whole process.
Well, I mean, you definitely got my attention, John. I think that a lot of my listeners are going to want to be interested in something like this as well. So, I mean, how does somebody contact you? What's the best way to get more information about it?
Yeah, certainly. Connect with me on LinkedIn. I put a lot of content out there around franchising, but then go to our website, franbridgeconsulting.com, sign up for our newsletter down at the bottom of the page, and would love to connect on a phone call. So if you sign up there, I'll reach out to you, and even if it's a 10-minute call, let's hop on the phone. We'd love to hear your story and help you better understand if it makes sense at this stage, time for you to go down that path and explore opportunities. And then if it does, then certainly happy to walk you through the process.
Awesome. Well, we'll make sure all that stuff goes in the show notes, guys. If you're listening and you're ever at all interested in franchising or getting as involved as an investor, whether it's passive, whether it's active, I'm sure John has got the answers for you. So make sure you hop on the website, FranBridgeConsulting.com, right? Is that what you said?
FranBridgeConsulting.com. You got it.
Or hook up with John on LinkedIn and send a message there. John Ostenson, thanks for being on the show today, man. It was great.
Absolutely. Appreciate you having me, Joe. Thanks so much.
Absolutely. Yep.